Welcome to Our Stock Trades. I'm re-recording the video. I realized OBS, there's so many settings I need to figure out, so we're going to stick to StreamYards. I'm re-recording this because you guys need to hear this, all right? So without further ado, let's get straight to business, okay? So, as you can see, back on June 13th, literally Monday last week, I spoke to you guys about how, the Federal Reserve is going to meet on Tuesday. They're going to come out and they're going to basically say 75 basis point hike. That's where the market's going. And all that came into fruition. I told you other economic indicators that you guys need to look at and understand and know. And would you look at that? The Philly Business Survey came in last week, June 16. For the Mastering Stock Market recipients, that my students there, if you go down here, June 16, you can see all the economic indicators. This is very important. The Philly Business Index. Prior, we had 2.6. We were forecasted to get 5.5. We're at negative 3.3. Guys, this is bad, right? This is so people are like, what the hell is the Philly? What is the Philly cheesesteak, right? So the Philly Fed business here, all you need to know is that if numbers are above zero, it means the economy is growing, right? However, if the number is below zero, the economy is basically contracting. Okay, you can see that right there where I highlighted. So that's exactly where the Fed Business Survey is. So obviously you already know the economy is not doing well, right? And it's hurting. But rest assured, once the negative CPI data came out at 8.6, where they expected 8.3, things haven't peaked. We saw dumb money just completely sold off. They're just done. While smart money and institutions, they're going in and they're buying and they're doing exactly what they need to do. The purpose of this video is to basically teach you not to be dumb. Don't be stupid. Don't be dumb, okay? Because I'm telling you guys, this is the best. It's the best time to buy when you don't have a lot of YouTubers saying, go to the moon, go to the moon. Where's everybody now? Where is everybody, right? They're all gone, right? That is a great indication that we're nearing a bottom. Just think about it. You got to do opposite of what the market expects. Back when the market was extremely high, everyone was like, buy the dip. Come on, do this, follow me. Everyone is a genius in a bull market. Now, all the idiots, the fakers, the people that got in 2020, they don't know nothing about the market. They just experience a market where the Federal Reserve was pumping money. So if you basically put shit in the stock market, the shit got bigger. You know what I mean? Regardless of what company you bought, right? So now the big boys are coming in and it's time to actually really evaluate a company. So what now? What do we need to do? Inflation needs to peak. We need to wait for it to peak. That's when the market is going to then start to discount future cash flows, the actual future cash flows, okay? Once that happens and inflation peaks, things start to go down. Price stability comes within the markets. Unemployment may have to basically go up a little bit. Then we get that contraction, and then we get that reset. The housing market's screwed, but by the time that this hits the housing market, which we already have started to see, and I have a graph for you. I'll remind me to show you my housing market graph. Our private Discord, someone said, Jesus effing Christ, this is crazy, right? But we need to see it peak. Now, again, the S&P 500 back in 2021, 90% of the stocks were above their 200-day moving average. Now, only 11.3% are above their 200-day moving average. We're going to be teaching this in the Mastering course. This is called Stage Analysis. We have about 20, 30 books, literally 10 years of experience. I'm going to be digesting it and giving it to you guys. Literally, you'll learn it like within 1-2 months. You'll essentially be masters, and you'll basically use our data, our software for your lifetime. But check this out. Here are the prices. Here's a 30-week MA. Take 30 weeks multiplied by 7 days, right? Or just, 30 because the markets are closed by 7. That's 30 times 5, or the 7. We'll call it 7. 210 days, right? But we call it the 200-day now, okay? Back in the day, they used to call it 300, okay? Sorry, the 30-week. So when the price goes above this 30-week MA or 200-day moving average, we're in an essential bull market, bull run, right? The stocks are doing great. Once we get that double top, that stage 3, a lot of algos traders, technical analysis traders dip out in the market, and it becomes risk off. And people are just buying these dips, these fake bear market rallies, and again, if you don't have an intrinsic value calculation, if you don't do fundamental analysis and actually see if a stock is heavily discounted, then you're just buying in the blind. So a lot of technicals, because that's all they know, they just use this. Now, again, Clover, I would say, is completely undervalued. You can go ahead and If you look at its charts, it would have to jump to $4 for it to cross its 200 MA, which is a whole different deal. That's already double the money right there. $2 is such a good deal. Let me give you an example right now. Here's the NASDAQ, and here's the 200 right now MA that you have right there. And we've been bouncing off of it, right? You see how it not even touch it, but this one literally bounced off of the 200 MA back in 2020. So we may do the same thing here for 2020. If we break, we're going to have to wait for it to recover, but this could bounce off and we could be doing higher highs in 2023 to 2024. It depends where this recession will take us. Again, retail food spending declined 0.3% month over month. That's a negative. So let's go ahead and talk about this 200-day. Again, back in 2021, when stocks were actually overvalued, literally everyone and their mama was telling you to buy stocks, buy Bitcoin, buy this, buy that. You had literally people that never understood the markets talking to you guys about the markets. You had people uneducated about the markets, literally teaching people that, stocks only go up, and then obviously stocks go up. So then it's a false fallacy there where people just follow them blindly. The market was completely overvalued. Last time it was like this, it was around 2012-13 before we got a nice dip because of the taper tantrum back in 2000 here in 11, and also near the post level of the great financial crisis. Right now we're at levels of really extreme pessimism, and the last time we were at these levels, we're down here. Again, this pink, you can see the data here, is literally declines of more than 20%. Okay. Now, if you go to the volume ratio, the last time we had these much volumes in the past of selling pressure, literally when things go down heavily, was back in 1966 and 1987, and now finally in 2022. That's a big deal, guys, because you can see a year from now, we're going to be up 20% based off of this data. So patterns, they don't have to repeat themselves, right? But this is looking like a pretty extreme pattern that we are seeing, especially when it comes to the volume. And there's other data points that basically confluence to this hypothesis that we're having. The thing is, this market is not normal. So a lot of the Clover investors that first invested into Clover in the beginning, this is a different level, guys. If this is the first time you've entered in this market, this is a big deal, guys. The last time we had declines like this, never. We broke history. Not even in 1928, guys. That crazy crash, the Great Depression. Well, guys, this is killing it in the amount of crash that we had. Now, very quickly, there's a lot of data. Let's take a quick break. Please use the link down below to sign up for 10 free stocks. Again, these are 10 free stocks to qualify for our 1-year giveaway of our stock alerts, which is we're providing it to 2 lucky winners. All you have to do is win yourself your 10 free stocks, deposit at least $100, put your name in the comments section down below, and guess what? You guys are going to get your 2 lucky winners are going to be entering in a raffle, and they're going to be winning a whole year's worth of our stock alerts. All right, that's a good break. Now back to business. So if you look at these 4 out of 7 sessions here with these declines that we basically see of 90%, you can see after a year, we got a 20% return, but really the win rate positivity, 88% with significance, with a great little level of significance with the Z-scores here. You can see that within 6 months, we're looking pretty good, and also within 3 months. So I do believe we're going to get a short-term rally. It depends. Is it going to be basically following the stage analysis, and is it going to be breaking the 200-day MA? If it doesn't, it's just going to be a little fake out. Maybe smart money is going to come in, try to dump some shares off of retail before slamming the market back down. When we get the data, we'll see it. Now, this is when the market is above the 200-day, right? I'm hitting the 200-day very heavily now because we just broke it, right? On some of the stocks and some of the specific futures, Bitcoin, right? But if you look at it right now, guys, we were trading extremely high. Now we're at levels, again, extreme pessimism. And as you can see, 1 to 2 months, the win rate, 80, 90%, it's, I would say, the returns are not as strong as those 2 to 3 months of literally 6.77% and with an 85% win rate. So it's looking pretty good here. Once you start going 6 to 1 year, the probabilities of the start dropping. So we have to take that into consideration. But it's very clear right now we're at extreme levels of pessimism. Just like how the stock market dropped here, many people thought it was the end of the world, probably here in 2020. Well, legit look at it now, okay? Then about 2-3 years from now, we're going to talk about another problem when the stock's basically up there in this area, right? All right, so let's go in and look at technology stocks. Again, we're getting returns here that last time we've gotten literally greater than 90% drops like this in the bear market has been these levels. And from these data points, because of these drops in in the tech sector, we've seen an average return of 17%, 88% of the time with a win rate. Again, these are all good indicators and numbers. The S&P 500 has a new, these are the new lows. Guys, we just hit this. This is very rare to hit, guys. This is not something that you hit every freaking week. We're hitting these, guys. It's dropping a lot. And look at the rate of return here. A year later, 42% average return with a median return of 43.40%, 100% of the time. Okay? So a year from now, 2 years from now, that's why my intrinsic value calculation, it's looking really sexy. Okay? So I want to make sure I spoke to you guys about everything about, okay, so let's go to our mastering. Let's go to the recession indicator, and let's go to the recession predictor. So if you guys look at this recession predictor, every time these things hit this black baseline, we get a whenever we get that black base, we get a recession. An inverted recession, an inverted recession. Nowhere in the history, let's zoom in on here. Nowhere in the history has you have the 10-year -2 signaling recession, but the 10-year minus the federal funds rate signaling no recession. Which one do you think the government uses? The government uses this one. This is the one that's more predictable. So the government's right when it's basically telling you, I don't think the recession is going to happen. And if that's the case, this is just a bear market, which is pretty damn cool, right? But again, I don't know how the hell they're going to do this because the economy is contracting. So maybe the equity markets are forcing this. I don't know. Again, listen, please use the link down below. You're going to get 10 free stocks from Moomoo. Once you get them and you deposit at least $100, please comment your name down below. You'll literally get access to our 1-year free subscription to Our Stock Alerts. And guess what? Current members of Our Stock Alerts, you can apply too, okay? So obviously this is just for United States citizens. My apologies for my Canadian friends out there. Canadian, the maples, good old syrup. I'm gonna think of you. I'm gonna figure something out, okay? All right. Other than that, it's a privilege and honor. God bless each and every one of you. I managed to cut this video and very short, and peace out.